Thousands of traders just like you across multiple markets each and every day. If you haven't joined yet, you can open an account and begin trading in just a few minutes. Click the link in the description.
What am I doing? I told myself this year was going to be different. So many things I want to achieve, yet I'm here wasting my time doom scrolling. I was going to start running again. I was going to make more of an effort with my friends. I was going to work on my confidence. I was going to get fit again. I was going to start trading. Time to wake up and stop making excuses. Okay, switch markets. Let's do this. When you're ready to trade, Switch Markets is waiting for you.
By the way, you're not trading alone. There's a whole community of traders tuning in daily, sharing ideas, watching the markets together, right here on the Switch Markets YouTube channel. If you want to be a part of it, subscribe and tune in daily. I'm here to answer your questions live.
Time moves in a constant rhythm. Every second counts. Every decision carries weight. In trading, the cycle never stops. Opportunities appear. They disappear, sometimes before I'm ready. Even when I step away, the market keeps moving. What if I'm wrong? What if I miss? What if this one turns against me? Every chart I've ever studied, every level I've marked, every rule I've committed to, all of it comes down to one moment, executed with clarity, without hesitation, because control is choice. And in that moment, control becomes edge. Switch markets, trade with discipline.
If you're already trading, why settle for average? Switch Markets is raising the bar. Tools, resources, dedicated live support. It's time to make the switch to Switch Markets. A quick one before our live stream starts. If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with Switch Markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're asleep.
Meet Switch Markets, a broker for ambitious people who want to trade the financial markets.
You mean that I can trade things like Forex, stocks, even gold with you?
Yes, you can even trade the coffee bean market with us.
What about digital currencies? Can I trade them too?
Absolutely. Maybe now's your time to get in.
Oh, and are you regulated?
Yes, we are.
And how easy is it to deposit and withdraw? Will you charge me any fees?
It's easy. Deposit and withdraw instantly. Nice and simple. And unlike that guy, we won't grab any fees from you.
Do you have a low spread trading account?
We certainly do. Pick from our zero commission or our low spreads account. It's up to you.
Okay then, what makes you so different from every other broker out there?
Our 5-star rated real human customer support and our perks package worth thousands. No other broker can beat it.
So, who did you say you were again?
Switch to success. Trade with Switch Markets.
Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the ORB Workshop. Today, we're going to cover the 2-bar opening range breakout strategy. We're going to show you some nifty tools that we've got coming online over at Switch Markets as well that can maybe help you develop your own strategy that's related to the ORB. And I'm going to show you a little bit of coding that I've been doing and some results that you may be interested in. You may be surprised exactly how effective this ORB is. We'll talk about that here in just a little bit. I'll break down, give you the rules to the strategy. We're going to go ahead and scout out the markets today. Had a couple of pretty good ORB trades, and what an opening range breakout is essentially is just that. It's an opening range followed by a breakout. So I'm going to show you exactly how to trade these things. We've also got a ton of content over on the How to Trade Com YouTube channel on the ORB. So I'll drop the links, and we'll be sure to get everybody involved. If you have a question, be sure to ask. That's one of the things about these live streams. They're interactive. So if you do have a question, take the time to ask. I will do my best to answer it. A couple of rules on these live streams. Of course, number one, if I don't know an answer, I'm not going to sit here and waste your time and pretend that I do. And number two, if it makes money, it is the right answer. And we've got an opportunity here for a strategy that can really give you a structured way to trade equities and Forex. Primarily equities. I think U.S. equities are probably what you want to focus on with this opening range breakout. However, I will show you how to do it on the Forex as well, and we had a really great 2-bar opening range breakout this week on the U.S. dollar, Japanese yen. So a lot going on, guys, out there in YouTube land. Hello, everybody. Davy Tech, good to see you, Davy. Jason Maxon, what's up, Jay? I'm doing very, very well here over in the How to Trade community. Tuku, Bobby Bob, good to see you guys. If you've seen some of these workshops before, then there is going to be a few new things here on this one. So you might want to hang around a little bit and see some of the work that's gone in to this opening range breakout, this ORB strategy. So the first thing we're going to do is go ahead and show you sort of the thumbnail of the video that came from the How to Trade Com YouTube channel. So I'm going to go ahead. I'm going to drop this in the live chat out there on YouTube. If you're interested, you can check out this channel. You can also check out some of the resources here. Just type in ORB, and it'll bring all the content that we have on the opening range breakout right here. We've got the Forex ORB. We've got how to improve your ORB entries. We've got the opening range breakout. We've also got some shorts in there that can show you exactly what we're talking about. The 50% rule. That's a good one. We may, if we have time, we may talk about the 50% rule here today. There really was a great 50% trade that was executed there in the NASDAQ. So check out that YouTube channel. You don't have to subscribe. Subscribe over at Switch Markets if you want. That way you get all of our new content and things. But that is where you can find the bulk of the content online for this trading strategy. Okay, Ralph H., good to see you, Ralph. Before we go any further, I would like to cover one of the newer tools that they've launched over at Switch Markets. This is called the Market Movers. This is interesting because I get one of the biggest questions I get asked all the time. Shane, what do I trade? Not necessarily how do I trade, what do I trade, what time frames do I trade? Well, there is no real holy grail to the market and time frame. I mean, we can't just go market plus time frame plus strategy equals, riches. However, choosing the correct market and choosing the correct strategy for that market at a given point in time is incredibly important. So this tool right here is pretty interesting to me. Winners act, spectators watch. You can see all the different asset classes. We've got Forex, we've got indices, stocks, cryptos, and metals. So let's go ahead and talk a little bit of metals. Let's go ahead and click Learn More on our metals, and that should pull up it should. Okay, there it is. So this is our board right here. Top 5 market movers of the last week, right? Past 5 sessions. The theme here is winners act, spectators watch. Well, take a look at what you have here. It's sort of a little calculator that shows you if you're trading your balance, if you're trading your trading account on markets that move, then you can expect maybe some of these returns. Now, the first thing that we're going to look at here is, okay, my trading balance is 1,000. My multiplier is 1. So let's just say we're trading 1x. That means we're not applying really any leverage at all. We're just taking positions in the market with very small lot sizes and whatnot. So if we're only investing maybe $1,000 over 5 days, you can see there's the return. That's just 1,000. That's 1x, right? Well, the trading summary is what? Negative 11.97. You're down $119.67. But that's only if you're taking longs. What happens if you're taking shorts? What happens if you're shorting these markets? Well, then you've got a legitimate chance to make that money. So just because gold USD is down, 1.86% over the last 7 days, yeah, but if we're shorting it, theoretically, we could have made that money. So remember, longs and shorts, what this tool can really help you do is identify what's moving. So let's say we take a look at, 1,000, that's 1x. All right, let's go ahead and kick that up to 3x. Recalculate. Now you start to see the power of leverage and how leverage does magnify your returns, and it can also magnify your losses. So that's interesting. That's just a quick look at your metals. How about crypto's been getting absolutely hit? Let's go to stocks. Take a look at stocks. Go ahead and give that a click, and you can see some of the big movers and shakers here really give you a good look at how you can invest potentially and make a little bit of money. You've got some DuPont, you've got Groupon, Digital Turbine. I mean, these are monster companies. BlackBerry, really, BlackBerry back in the news. I don't know if anybody still has a BlackBerry. I remember when they were a big deal, but you could take a look at something like that. Let's say we want to, okay, BlackBerry. We're going to get in there on BlackBerry. Over the last 7 days, you'd be up 33% on $1,000. That's fantastic, only with 1x. To the long side. What about 3x? You're making pretty big money. So you really do need to understand that your success in the market is a function of leverage. It's a function of finding markets that are moving. This tool right here, I dropped the link in the live chat out there in YouTube. I'll drop it in the How to Trade trading room as well. But you guys, this is interesting. This will show you what's been moving, and potentially if you're lost, and you say, oh, man, I don't know stocks. What do I trade? Indices. What do I trade? Forex. Which pairs do I trade? Well, take a look at what's moving, what's been moving. You've got, what do you got right here? Okay, Great Britain pound kroner on the move. Dollar krone on the move. So clearly something's going on in Norway. Maybe they're all excited about, or maybe they're all over here watching their soccer team play in the World Cup. So you definitely want to be aware of what's moving at all times. That can really help you. That's really one of the first puzzle pieces to becoming a successful trader. And as soon as you know what's moving, and then you can start applying your strategies and attempt to get in there with a little bit of efficacy, a little bit of a savvy, potentially build yourself a life in the markets. So we definitely want to start off with those tools. I think that's a pretty good place for you guys to maybe start looking for markets if you're confused about what to trade. By far, one of the most common questions I get ever: what do I trade? What time frames do I trade? And then some of the other questions are, how much money did you make today? How much money did you make this year? How big is your house? What kind of car do you drive? Get that a lot too? I don't answer those because they're not important. What's important is everybody gets in here and approaches the markets from a position of strength. And that's what strategies are designed to do. It's going to be up to your execution, how well you do. 2-bar orb, I'm going to show you today. It's pretty good. It's pretty good, and it can be really good if you do it in the proper fashion. So, all right, guys, that's enough of that. I did want to lead off with that, though. I was shown that today by some of the R&D guys, the research and development guys over at Switch. They said, Shane, how about check out our market movers? And I said, yeah, that's pretty cool, actually. Pretty neat. Let me see, Lesso, I'm excited to see what I'll grab from you. Absolutely, Lesso. I'll be sure to ask any questions at all you want. Team Marina, happy hump day, everybody. Neriak, laugh out loud. Hey, listen. If we're not laughing, we're dying. That's the way I look at it. And always a pleasure, Andrea Garwal, out there in the How to Trade community. Welcome, Andrea. All right, guys. All right, let's do it. Opening Range Breakout Strategy, otherwise known as the ORB, is a very popular strategy online on YouTube. You can go ahead and run a search for ORB. You're going to get a bunch of different people giving you their takes on the ORB strategy. I'm going to talk about one of the most basic. It's a 2-bar ORB. Very simple. I like simple. Simple's better. We don't need to be getting caught up in the minutia of, what's the best way to build our opening range? How are we going to do it? Let's make it simple. Let's get good at execution, and then we'll start tweaking as we go on. That's about what I would highly recommend with any strategy. All right, trading the open and the close. Ignore the close. I was thinking about a closing range strategy. It's going to have to happen later. I'm going to have to sit down and really get the AI machines turning to see if there's anything there, but there is something there for the New York close that you could trade every day. That's a work in progress, so we'll get back around to it. In any case, these are the openings and closes around the world. Tokyo Open, you can see this is all in Eastern time. London Open, New York Open. We're going to focus on the New York Open today because that is where all the action comes into the market. Not all the action, but a vast majority of the market or action comes into the market for the U.S. indices. So that's key. That's going to be what we're looking at here. Now, London Open, that's great. Tokyo Open. What could you maybe trade short time frames on the Tokyo Open? You could be looking at the Nikkei. You could also be looking at the Japanese yen. You could do that there. How about the London Open? What could you be doing there? FTSE 100? Absolutely. First couple of bars? Why not? How about Great Britain pound? So all these opening times are very important if you're interested in trading this strategy around the clock. It's doable. I mean, you can absolutely do it. You just have to apply the right market to the right time. And timing on the opening range breakout is everything. is everything. If you don't time this correctly, and if your bars are wrong, you're going to lose because it's not an opening range. The opening range is the most important part of the strategy, bar none. All right, 2-candle orb setup, guys. This is easy as an orb gets. Now, if you run a search on YouTube, if you go on there and you say, okay, listen, we're building ranges on oscillators, and I watched a gentleman the other day was using a 1-minute chart, and he was talking about wicks and candle formations in the first 2 minutes of the trading day, and I said, good luck with that. Help yourself. Maybe the guy makes a fortune. I have no idea. I don't believe in that. I think it's way too small of a time frame. However, 2-bar orb, first 2 candles after the open. Any time frame. I'm going to say any time frame because it's up to you to make it work, to do the back testing, to do the legwork, to build these trades so it's a functional strategy. Any time frame. We're playing breakouts to key levels. We'll talk more about those in a second. It's ideal for equities, commodities, and maybe applied to Forex pairs. Commodities are a little bit nuanced. The timing of the commodities is very big. If you were going to trade gold and start off with a gold opening range, you probably need to start about 8 a.m. Eastern, which is about an hour and a half before the U.S. Open. I highly recommend doing that. Or we could go to longer time frames. That's a bit touchy. Crude oil futures, 9 a.m. Eastern. That's when you would start. 30 minutes before the U.S. Open, that is when that starts. I'm positive of that one. Gold, a little bit more nuanced. All right, in any case, that is it. This is essentially the strategy. So we're going to go right here. U.S. 30 market, the U.S. 30 market 15-minute chart. We're going to be working with 15 minutes and 30 minutes. I'm not interested in going any lower than 15 minutes. In my personal opinion, I believe it's irresponsible for me to sit here and give you a 1-minute chart and say, okay, there's your 2-bar orb. So what is it? Well, opening bell, ding, ding on Wall Street. There's bar number 1. There's bar number 2. That's your range. Your range is from the high of the first 2 bars to the low of the first 2 bars. I draw it as a red rectangle across the chart. That way I always know where my range is. Okay, where are we going to enter the market at? Simple. The first bar that breaks and closes outside of this range, either bullish or bearish, is going to be our entry point. On this particular trade, there's your entry bar. This was today. This is today's price action. There's your range, bar 1, bar 2. Let's get the highlighter going so we can show you. There's your range. First 15 minutes of the session, second 15 minutes of the session. That's your opening range. We're looking to play a breakout out of that area. We believe that first 30 minutes of trade, those first 15 minutes of bars, very important. That could potentially be a range that we could look to play a move from. So where would we enter the market at? First bar that closes outside of the range. There it is. In this case, it's bullish. Now, this bullish break right there, that's going to be our long side entry. If we broke beneath the range and closed down there, then we would be selling. We would be short. Remember, the beauty of CFDs and futures contracts, derivative products in general, is you can make money buying and you can make money selling. To me, that flexibility is everything. I get asked a lot, Shane, do you like buying or selling better? Selling. I would say I'm a sell side specialist. I love selling. Those trades, when you hit a sell perfectly, they're easy. The market just gets destroyed and you basically pull the money in. However, buying, I'm cool with buying too, as long as the trade is there. Okay, so this is a good look at the US 30 today. Bar 1, bar 2. There's our range. There's our entry. How do we manage it from here? Options. Every strategy has multiple options. The best way, and the according to Hoyle way, the simplest way you would do this, stop loss goes beneath the range. Now, we don't put it right on the bar. We're going to pad that a couple of pips down there because I want to make sure that if we just take maybe a 1 or a 2 pip look and then reverse, I'm still in the trade. So that's where your stop loss is going to be. So we've got our entry point and our stop loss broken down. For me, what would we be looking at as potentially being a profit target? Lots of options. Now, I talked about key levels. Key levels are a big part of the market, right? Key levels, previous day's high, previous day's low, previous week's high, previous week's low, all-time highs, things like that. How about liquidity sweeps? A lot of you guys love liquidity sweeps. How about that one? Right there on 25th of June, 8:30 a.m. That would have been the high of that day, right? Well, today is the 7th, or excuse me, the 7th. It's the first day of July. So theoretically, this area right in here could have been a key level. Potential profit target, right? What's the challenge here? The challenge is making the risk versus reward work for you. Now, here's where I really preach, and I've been preaching it for 5 years. I believe that if you go lower than a 1-to-1 risk versus reward ratio, your long-term profitability is not going to be where it needs to be. What's our ratio right there? 0.5. It's not good enough. What would I have to shoot for to make this trade worth my while? At least a 1-to-1. So is this trade a winner or a loser yet? Didn't really get the follow through to my big time level up there. What I need is a 1-to-1. So if my key level was right in here, was sort of that swing high from the 25th of July, right? Or June, right? That swing high back on the 15th, market structure, okay. Didn't really get extension. So I have options. My first option with this orb, if I don't like the location of the key level, I can ignore it, and I can just put on my static risk versus reward and let it play. Okay, that's fine. What else can I do? I can play it tighter. What does that mean? I can bring my stop loss just a few pips right beneath my, right beneath my signal bar. See, even you get these things wrong, it does happen. How about that area? Now what does my trade look like? Now all of a sudden I'm looking for a 1-to-2, right? But do I still even have to do that? There's your 1-to-1. Say, Shane, you just reversed engineer, you're BSing us. No, I'm not. Every time you take a breakout trade, it has to be worth your while. And I will look the other way on a lot of mistakes people make in the markets. If you were trading for me, if you were at my trading desk right now and you said, Shane, I want to put on a bigger risk on this trade. I want to put on a 7% risk on this trade. And I'd say, okay, if you believe in it, I'm not going to really eat your lunch for that. I'm going to say you're not going to have much money left to trade if you lose too many. I'm not really going to get too angry about that. There's really only two cardinal sins that would get you fired from my trading desk. Number one is making a winner or a loser when the market goes way in your favor and then comes back against you and then you take a loss. You'll probably get fired for that. The second thing is taking trades that aren't worth your while. Every trade you take has to be worth your while. So this key level, and we're just using this as a basic profit target, but it illustrates the concept of the key level. It was definitely a swing high there. It's on a 15-minute chart, but still, it's a daily high. We can shoot for that. Probably, last week's high? Maybe, potentially. Something like that, isn't it? So we're looking at that saying, okay, that's a pretty big level. That's a key zone. I like price to test my key level. I like this breakout to move at least there and test it. Okay, but it's not worth it if we're going to risk this much money. So we've either got to tighten up our stop loss. Now it makes sense. Or we don't take the trade at all. So you have to focus on trades that are going to produce. They're worth taking. If they're not worth taking, don't take them. There is a ton of markets out there. We're going to buzz through two more right now and then maybe a third with the Russell 2000 just on this specific setup after the U.S. Open. There's dozens of markets out there. Use that market movers. Take it. You could put this on stocks. Take a look at which stocks are moving and then trade those after the open. So I never really want to hear the excuses, well, I can't find a trade. If you can't find a trade, take the day off. That's fine. But with the orb, there's trades there every single day. You just have to find the ones that are worth your while and the ones that aren't. This trade right here, is it worth our while? Well, it was a winner. It was a winner if we managed it appropriately. This right here is an interesting concept. Stop loss beneath your trigger bar, right? There's your trigger bar right there. What do you got? Stop loss a few pips beneath that. That's a much tighter way to play this action. It can keep you out of trouble. I like that when the trigger bar is elongated. You can see that big green bar right there. All right. If the market reverses and trades beneath that, we're probably in trouble anyways. That's a pretty good move right there. And moving that stop loss up makes it worth your while. And if you did that, you won. If you took the general position, you're still in this game. You're not out of it, but you just need a bit move. You need another leg up. You need something like this. And 1-to-1s are minimum. That's minimum. A lot of folks trade 1-to-2s, 1-to-3s, 1-to-4s. All right, that's the basic mechanics of our orb. Now we're going to run through some other markets, and then I'm going to get into some things that I've coded, and I'm going to show you some results. I'm going to add a disclaimer before the results, though, because I don't want everybody to get too excited for their own good. All right. Way behind on the live chat. Marvel Expendables. I made it this time around. Peace and love to everyone. Greetings, Sir Shane. Good to see you. Marvel, welcome. Nice strategy. It's a very, very nice strategy. If done properly, if used properly, it can be very good. It really can be. If used improperly, you can lose a lot of money quickly. We'll talk about that as well. Ralph H., would you take that trade if the breakout candle was smaller? 100%. Let's say the breakout candle closes somewhere right in here. And it's a great question, Ralph. Let's say we close right in here. 100%. Would I manage it in that fashion? No, because then I could at least make my one-to-one work. Now, I could have a stop loss right here beneath my trigger bar. Just understand that it's a heck of a lot tighter. My success rate's going to go down. It will, just because we're playing tighter. You're going to get stopped out, and then the market is going to go in your favor some of the time. That's just the way it is. So could you do that? Yeah, you could. Absolutely. Personally, I would like to see it a little bit smaller so I could play the entire range. But this big green bar in this instance, if you set it up properly, it's pretty good. You got paid. Let's see, Bobby Bob. Today I applied the ORB on the US 30. Well, there you go. There you go. We broke it down. You got paid. Well done, Bobby. Can't beat that. S&P 500. Opening range breakout today. What did this one look like? Opening bell ding ding. Second bar, 15 minutes, 30 minutes. The opening 30 minutes of trade, where was the trade? Right there. There was your in. You got a nice rally. Did you get any money at all out of this if you're playing a one-to-one? No. Same basic type of a concept. If you brought your stop loss up right here underneath the trigger bar, then you can bring this down and feel pretty good about it. You're still in it. You know, we won't maximize to get the very top, but something like that, that's not bad. Is that really a position trade for the day? No, not really. Now, if you took the long and you said, okay, I'm going to play this conventionally, then you just have to get a bigger move. And a lot of traders are looking for those 1-2s, 1-3s, 1-4s, and that's great. I don't have a problem with that. A true breakout trader probably is looking for 1-2s. But we also have to look at our key levels and say, where's our keys at? Well, we could go back here, 15-minute chart. This is last week, 22nd of June. Actually, it's a little bit longer than that. This swing high right there, where was that at? 7,500, 7,530? Is that a big deal for the S&P 500? I'd say. Where did we fizzle out today? 7,508, 7,515, 7,518. So is this doable right here? 7,530, is that legitimate? It's not a bad trade, really. If you wanted to hold the rest of the day, is it worth your while? Not really. Probably do something like that. The key levels are really important because they really are predicated upon market structure. So if you were looking right there potentially as being a sweep, okay. How about this order block up in here? How about this area that developed after all this huge volatility and then the move higher, and then you're looking right there at back on the 15th of June, weeks and weeks ago. How about that order block? Is that legitimate? Is that a legitimate target? Yeah. Is it a legitimate target for today? Probably going to be a stretch to get that much of a rally today. Do I want to make it a swing trade? Maybe. If it's going to become a swing trade, what does that mean? It means I'm going to have to hold. It means I'm going to have to hold. So if you wanted to take this trade, and you can do it with a CFD, you can hold those overnights. Futures, not as easy. The margins, the maintenance margins to hold through a market closure are very large for an E-mini S&P 500. You have to trade a micro or a mini, or not a mini, but a micro E-mini contract to be able to afford that. But on a CFD, you could hold. So could this potentially be a swing trade for you? Of course. Is this worth your while? Yes, it is. You're looking to get a nice test of that area right up there, right around that swing high. That's a pretty good zone. So we're going to go ahead and leave that trade. We're going to leave it sort of built, and we'll reference this. We'll come back tomorrow and see exactly how this one performs. But we're on the rally now. It's not a bad trade. It's just you're going to be in it longer. You know, this one right here, nice pop. If you're a one-to-one pop, that's fantastic. Here, even if you're playing a one-to-one pop, it's not really there yet. This could be a way to play longer. Swing trading. Not a bad way to play the opening range breakout either. Do you really want to hold through two opens, though? I think it's risky. I really do. But you can do it, especially with CFDs. You don't have to bail at the end of the day. Something to think about there. NASDAQ 100. What is this garbage looking like? This is a nightmare. Are you dead yet? You're not dead yet. You're close, though. Where was your entry point? Right there. Opening bell, ding, ding. Bar 1, bar 2. There's your entry. Closed right above it, and then started pulling back down into the guts of this range. That's ugly stuff. If you played this one extremely tight, you got knocked out quick. There was your stop loss, you're gone. If you're still in it, you're still in it. You're down a little bit, but you're still in it. So what would our potential topside target be? Well, this one's a little bit different, isn't it? It's a NASDAQ. What could we be targeting here? Top of 15-minute market structure, maybe top of market structure going back to base essentially yesterday afternoon, maybe yesterday's high. That's a fantastic key number. Is it worth our time? Well, if we're long from right there, and let's say we're shooting for the top of market structure, stop loss is down here, 1.5 to 1. It's doable. Is it probable? Probably not. This time of day, we've only got about 2.5 hours left in the U.S. session. Once again, this would be another trade that could potentially be a swing trade. Now, let's say we want to exit, bring this down to a 1-to-1. Could we do it? Right in there? Potentially, yeah. There's your 1-to-1 trade. What do I like? Probably be shooting for the top of that market structure. Maybe see if we go up and challenge, let's see, Tuesday's high. That could be very good. Not a bad trade. Right now, though, it hasn't worked well. It hasn't worked well. Closed there, retracement back down into the guts of this thing. Didn't stop us out. Now we're catching some bids. Really choppy, ugly session. And when you run into these types of dynamics, this is what can be very, very challenging for breakout traders. There is the chance the market doesn't do a damn thing after you enter it. And that's exactly what NASDAQ traders are dealing with right now. The breakout's there. I mean, there's your entry. There's bar 1, bar 2. There's the close outside. I mean, you are live. Boom, boom. And now you're just sort of doing this. What do? Do you hold it? Could. You know, right now you're sort of stuck with it if you're in. You sort of bought it. I mean, you're kind of in. At this point, could you cut it off or let it run? I would probably just let it run and see how it comes out. Usually advise 1 to 3% on any given trade of your account balance. If that is, in fact, the way that you're looking at this strategy and a way to trade it, then yeah, you do it. You do it. Okay. Now, let's talk a little bit about algorithmic trading. And let's talk about EAs and talk about what it is to build something like the opening range breakout into a system. All right. I definitely want to cover this because it's important. Now, before I start showing numbers, I want everybody just to relax. Understand that when you run back tests and you run all these different things, all these different iterations potentially on some trading software, be it on MT5 or TradingView. I'm going to show you some stuff that I did on TradingView. It can easily be adapted to MT5. All you do is a little bit of coding, and I'm going to show you a tool where you can start working on that type of stuff. Now, back-tested data can fool you, and it can trick you. And typically the big pitfalls of running back tests is that you fall into something called backfitting the data. And I want everybody to be very clear on this. When you go through and you run a strategy like the ORB, and we have the technology now, and you say, okay, I want my 2-bar ORB on a 15-minute chart, S&P 500, run it for the last year. And that's some of the numbers we're going to look at. I'd say run it for the last year. What do the numbers look like? Understand it's going to give you a look at a cross-section of data with this strategy applied. It doesn't necessarily mean the numbers are as valid as you want them to be. There's a million things you have to do. You have to get in there. You have to make sure that the trade's executing. You have to account for slippage. You have to do all the things that you need to do to make sure that this thing is long-term viable. However, back testing can give you a really good sense of how this strategy performs. I wouldn't take the results as gospel, but it's how the strategy performs. So, all right, let's go ahead and just sort of get to it. Now, what I mean by back testing or backfitting, data backfitting, is the first tendency somebody has when they take an ORB is they put it on a historical data set and they say, what do I have to do to optimize and get the best set of profitability numbers? And what that means is you're going to adjust your profit target and adjust your stop losses until you dial it in and it shows you the absolute best profitability for a given period of time. That's called data backfitting. It does not work. What we're looking for are concrete rules that perform well over a variety of markets. If you can do that with a strategy like this orb, then you have something. Then we get into walk forward analysis, and we can do all sorts of different really statistical things that honestly are above my pay grade. They really are. You bring in the quants and they nail it down for you beautifully, right? Well, with the AI, you have your own quant. You have your own guys that can actually do this. You can run tests on anything you want, any iteration you want. I'm hesitant to go this route with this stream, but you need to understand, and I'm begging you, that if you come up with some great back-tested data, or even if you come up with negative stuff, really start looking for mean values. Don't just backfit. Don't just look for the optimal profit target and the optimal stop loss. Don't do that, because invariably what's going to happen is you're going to be put onto the most volatile market, and you're going to be put onto these 1 to 5, 1 to 8, 1 to 10 risk versus rewards, and you're going to completely ignore drawdowns in the process. And I've watched guys go broke doing it. Don't do that. Be conservative with what you're doing. Build your strategy and your back testing. Be very, very smart with what you're doing. All right, that's it. That's my disclaimer. But I want everybody to understand that this is very serious business, because when we start seeing the profitability and what is possible, then you start going, man, you feel like you're only, right there for the millions, and it doesn't always work that way. However, these are powerful tools. So, all right, let's go ahead and get set up here. This is a strategy that I built for TradingView. Essentially, what it is we're just looking for basic 1-to-1 risk versus reward ratio. Actually, I believe this is a little bit better than that, a 1 to 3, something like that, 1.25. What this code does, and we'll just show the Pine script here. What this code does, and very much a work in progress, what it does is it identifies your opening 2 bars, it draws a rectangle around it, and then you start executing trades with a risk versus reward ratio. I believe that I put this one was 1.25 to 1, something like that. So the numbers are pretty good over time. They're not bad. This is the S&P 500 15-minute chart. Let's take a look at some of the numbers. So what are you plus? Over the last year, you're plus $73, right? I wouldn't worry about the $73 because the leverage that we're using is extremely low. I think it was like a micro lot or something. But look at your profitable trades. This is what we're talking about. Forget the raw numbers. Forget the I'm going to be rich. Okay. What do we have? We have this tremendous peak, right? Where you were way up. I mean, way up. And then for the last 100 trades or so, it's sort of been holding water and going down. Why do you think sort of the tide turned for this strategy going back to maybe April 2nd? Why were we red hot? Come on, guys. Think about it for just 1 second. Look at this thing. We start off negative last year, right? It's pretty bad. You're down like $100, something like that, right? And then you get the big rally. What happens? I mean, you're really killing it to start the year. Absolutely killing it with this breakout 15-minute S&P 500. What happens on March 2nd? The war starts. And all of a sudden, the markets get real choppy, real choppy. A little bit of a rally Thursday, April 2nd, right? So you start hitting a few trades, feeling pretty good. Okay, the markets have digested this war, which was March. And then what happens? And then we start getting into the deep water. We sort of hold our water through May, and then things start getting really tough again. That mirrors a lot of your experience in the market. That data set does. $73. Remember, this is micro lots. What's important here? Profitable trades. We're 152 out of 212, 71%. Working a roughly 1-to-1 risk versus reward. I believe we're looking at about a 1 to 1.25 risk versus reward. That's what I'm talking about. Forget the rest of it. That's the edge. You mean to tell me we're dialing in a 70% winner in my risk versus rewards right around 1-to-1? That's called an edge. That's a 20% edge. Now, do we have a large enough sample set to do that? No, not really. 212 trades in about a year, a little bit under a year. Look at the ebbs and the flows. Think about what you were doing here. You probably wanted to pull the plug on the whole thing. Trade 60. It was horrible. Then what happened? Why was life bad back in here? Holiday trading, always difficult. Look at when this drawdown occurred. Thursday, November 20th, and you had a real struggle until the end of the year. But boy, once the new year kicked off, that's Christmas right there. After Christmas, and then the new year kicked off, you were in business. War comes, life gets tough. Welcome to active trading. So that is just sort of a look at that. Is it great? No, it's not great. NASDAQ 100. How about this? Profit factor through the roof. Look at this. It's on a micro lot. We're using no leverage on this US 100 catch CFD. This type of thing right here, we're drooling right now. $360 max drawdown as a percent, 0.35% of what, a $10,000 account or something? Look at this. Profitable trades, 76%. Are you kidding me? 76%. You can see exactly where the trade was executed today. Software works with the execution. Boom, there was it. Right in there. Long. We're still long this thing, right? Interesting, isn't it? Now let's go a little bit deeper and let's talk about why this thing would have performed so well. And once again, don't get caught up in the percentages. Don't get caught up in the actual dollar amounts. How the hell is this thing hitting 76% in the trajectory? The trajectory of these earnings are almost at a 45-degree angle. That's over the last year. Why? It's because the NASDAQ's been trending higher and higher and higher and higher. You are catching breakouts. Breakout, 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 breakout. Let's take a look at some of these other metrics here. I mean, I really don't want to turn this into a trading view tutorial. Really don't, but let's take a look at some of these. Okay, there's total profit, total loss, yada, yada, total P&L. Okay, we're in the green. You can see max, we were way up, current, so we've come way down off the maxes, right? Trade analysis, average bars in trades, 17. So basically you're taking true day trades, average P&L. Very small leverage once again. 202 total trades, that's what I love right there. That makes me smile. 155 trades, 76.73%, 23 losers. That's good stuff. 202 trades. Roughly how many trading days do you think are in a year? 365 days in a year? 200's pretty close. If you're in the saddle for 200 trading days a year, you're doing pretty well. So this stuff is all useful. Average run-up duration, 27 days. That means you're hot. Average drawdown duration's 5 days. You're having a bad week. Now, once again, it's really easy to get carried away with these numbers. It really is. It's really easy to get carried away. How about our duration? What happens on, say, a 5-minute 2-bar orb? Uh-oh. It's a loser. And this only goes back, a couple of months because of the, we can do whatever we want, but right there, that's sort of a loser. Can we go back last 365 days? Is it a loser? Still a loser, right? How about a 1 minute? Can we get it to do it on a 1 minute? All right, 1 minute's a winner, right? Supposedly, over the last 365 days. Is that pretty good? 1 minute orb? Do you want to do that? That's what's important right there. 75% winners. That's what's important. So when you build these things and you start saying, okay, I want to build my back test to do what? Always have a primary goal in mind. Don't get too lost in the minutia because you can sit here and you can play this game all day long where you're just varying things. I've said on many occasions, probably the best time frame. Clearly, 75%, 30-minute chart. Pretty good stuff. NASDAQ, right? All right, let's get back down to a 15-minute. I got a couple questions in the live chat. I'm going to answer those, and then we'll get back to these numbers, and I'll show you how you can do something similar on MT5. All right, let me see. Babji, sup Shane, expecting an alien attack on Independence Day. That's the old Will Smith movie. Independence Day. I remember when that came out, man. That was crazy. Absolutely crazy. No, I'm not expecting an alien attack. No, not really. Hope not. I'm not sure that we can handle the aliens, right? Let's see, Marvel. For this opening range breakout, is it just a 15-minute first candle on the market open? You highlighted, what if the second candle breaks and closed above the first 15 minutes? Yeah, it doesn't matter. Marvel, 2 bars. 2 bars. So you see with our coded strategy right there, there's bar 1, there's bar 2. Bar 1, bar 2. That's your range. You're looking for the low to the high of the first 2 bars. The first bar in and of itself does not matter. Now, you can have a huge first bar, and the second bar can trade inside of it. If that's the case, then your range will just be the first bar. First 2 bars. The high of the first 2 bars to the low of the first 2 bars. Don't make it any harder than it has to be. Must you highlight the first 2 bars? Well, you don't have to. but that's your range. 2 bars, bar 1, bar 2, that's your range. The high of that range to the bottom of that range, that's your range. That's your range. That's it. That's all there is to it. That's it. Nothing more. All right, let's take a look at a few more of these things. The NASDAQ, a big-time performer. Did we run the US 30? I forget if we ran the US 30 already. Okay, so let's go US 30 today. Okay, so we've got last 365 days, and you can see exactly what happens. The US 30, crushing it. Absolutely crushing it. 15-minute chart, once again, 75%. My risk versus reward, I will double-check it, but I believe it's right at a 1-to-1. Right there would have been our take profit today. So it would have been a 1-to-1, potentially right in here somewhere. Right in here. Pretty serious profit targets. Profit factor, very, very solid. So those are good numbers. Those are very, very good numbers, and definitely something that you could take a look at if you're interested in building algorithms. Now, sort of brings us to our next tool. A lot of you trade on MT4 and MT5, so all that stuff on TradingView doesn't really matter. This is Algo Builder, and there's been a tremendous amount of work that's gone into Algo Builder. This is something that you get free when you sign up for a Switch Markets account and fund. You're going to be able to get pretty much a cutting-edge an AI tool. And what you would do is you simply just enter your idea, click Build, and get it going. So I'll show you just a few from my own account that I've done. As far as where the software, it's always being updated, so don't get too carried away if there's a little bit of a glitch or something. But I got just a ton of these in here, and some of these are fantastic because you'll get into something. You'll have a strategy, and you'll say, okay, a 9 SMA buy. Okay, so you could say, okay, strategy overview focuses on the 9 EMA, and there's your risk management and all that stuff. And then you look at the back test, and I can't remember if we ran a back test there or not, but something like this gives you a good idea of how you can really apply. So we would start with a basic thing. We could get in there and put some take profit levels, some stop loss levels, take profits at 3% trades, all sorts of different things you could do with Algo Builder. So you definitely want to have a close eye on this software. It really is a pretty good way to approach the markets. And it's as simple as putting in and just plain words what your strategy is. Maybe it's a crossover. You can see all these different crossovers: golden cross and death cross, 9 EMA, 9 moving average RSI buy. There's all sorts of ideas that you can get in there and run. You could even do the ORB. Just to your ORB, your opening range breakout, 2-bar ORB, first 2 15-minute bars, or first 2 bars of the U.S. session after the cash open. You could definitely do that. It's all right there for you in Algo Builder. Now, this is going to be a tool that we're going to be highlighting a lot as we move forward because there's a lot that's gone into it. Some beta, some previous versions of it had a few things that they were working out, but this type of thing is going to be probably in tip-top condition here relatively soon. So I would be looking at this as being a major benefit of having your Switch Markets account, where you just have all these different things that you can do with the AI technology. So when I'm showing you this stuff on TradingView, it's because I've already scripted it with PineScript, just using AI, but I didn't use it with Algo Builder. Now, what you can do with Algo Builder, and let's just go ahead, strategy on the U.S. Wall Street Open. Let's go ahead and just see what it does with that. So essentially what you're going to do is you're going to type stuff in like that, and it's going to spit out some logic. You're going to have some logic here, and then you're going to be able to run back tests after that. And you can see when we run this against the historical data, you can see immediately, where these trades are located, where they're getting entered, where they're getting thrown out. And you can see right here what's going to happen is it's generating the trading code. And what that code's going to be is it's going to be for your MT5 platform. It's going to be MQL5. So what you can do is you can go on this Algo Builder. You can run stuff like we just talked about today with that ORB, opening range breakout, put in your time frame, put in your asset, what you want to do, and then you can actually run back tests, and you can run the actual strategy. Now, it does take a little bit of time, and to be really honest with you, I'm running 50 charts right now, and we're running live streams, so this probably will take my computer a while to do because it is maxed out right now. It's definitely running hot. I'm surprised we're not dropping frames, but that is essentially what it is. That's what it does, and you can get into some of these other ones, 920 SMA sell, strategy overview, entry conditions, exit conditions. The AI, the algo builder, builds all that for you. It builds all that for you, and all you do is enter a few things. So you go here. I've generated a 2-bar opening range breakout strategy for the U.S. Wall Street cash open. Check it in the code section. It builds the opening range from 9:30 to 9:31, America 1-minute bars. Of course, you can get in there and change the bars. Trades a closed-based breakout above or below that range until 8:30 a.m. Eastern. Uses a stop side. Uses a stop on the opposite orb side and targets the 2R, filters out days where the orb is too small or too large, and forces exit. So all that other stuff was additional. That's what the AI can help you do. All right, so let's go ahead and just click it and run a back test. And let's see, we've got trades, logs, we've got all these things, but there's code. You understand that? You got to upgrade to get the code, but what the code is the code is MQL5. Now, when you do have your account, your Algo Builder account via Switch Markets, you're going to get access to the upgraded version. You're going to get the code. So you can see right here, poorly returned, only produced 5 trades. Why would it only produce 5 trades? Because we're looking at very, very small time frames. And you can also see, I don't know what days. So that would be through a year. So you'd have to definitely get in there and do a little bit of tweaking. But one of the things you can do is when it performs poorly, you can also optimize. You can go to Strategy Optimizer and run some optimizations. So what I would say is just because you find one that, say, doesn't work, or maybe there's a bit of a problem here, you just keep running back tests with different iterations. You keep running the optimization, strategy optimizer, which pops up after a few back tests. You can definitely optimize. Like right there, request a parameter optimizer run, an orb filler bounce. You could say, okay, run the optimizer, run optimizer. And then you're going to get this thing to run the optimizer. That probably is going to take a while. So this is an exciting tool. I'm excited about it. I think it's going to be pretty good. Whether or not it's there yet, but it's definitely getting there. But this would be something that if I was going on to Switch Markets and I was saying, okay, what is value added to me as a trader? Things like Algo Builder are value added. So you could definitely look. This could take forever, though. It's usually relatively quickly. It happens relatively quick, but my computer's sort of maxed out. So that's sort of where we're at with the future of algo trading. It really is all there. You could also, if you want to take more of a hands-on approach to your own coding, you can go in and take these ideas, run it through Claude or ChatGPT or any of those, and then bring the strategy into your trading view in PineScript. You can also run it in MQL5 on those as well, so you can integrate it directly into MT5, but you could build it here. You can go to Pine Connector, connect your PineScript and your trading view to your MT5 and run it that way. This is a comprehensive strategy with entries and exits that gives you back-tested data results. It really is pretty fancy stuff that we can do now compared to when I was young, when I first started trading back in 2011. We had a big research project and it was all done on pen and paper. And then around 2012, hired a programmer. It was $1,500 per iteration, and we had our system built into NinjaTrader. And then we sat there and we ran back tests looking to find something that worked. And it was $1,500 just to get a version. So by the end of it, you're up. You can run up a $10,000 bill really fast. This is free. This is one of the things AI can do for you, and I really, really say that you take a look at that. All right, this optimizer could take a while, but that's the procedure. You just keep running things and optimizing until you find out something that works. That's for sure. All right, let's see. I got a couple of questions here. Marvel, is it only the MT5 the Switch Markets uses for trade executions? Yeah, MT4, MT5. So if you're interested in trade execution via MT4, MT5, Switch has you covered. That may be growing as we move forward in time. There's going to be a lot of changes there with regards to upgrading infrastructure, but MT5 is what I would recommend everybody sort of get used to. It came out a while ago, but that's where you find the thousands of the CFDs and all that market access is through MT5. All right, let's see. Ralph H. Is there a change in the strategy of the orb for Forex? Yeah, I mean, there really is. This is a good 2-bar orb in a way that I suggest that you may want to begin swing trading. If you're going to use the Forex orb, I like 4 hours, and I like it right after that Sunday open. This is a great example of the dollar yen, right? So right there is going to be your open. 28th of June, that would have been Sunday afternoon. My time could have been in the morning, your time, depending on where you're at in the world. And that would have been bar 1 and bar 2 with nice 4-hour charts, right like that. Opening week, that would be your first 8-hour range, and then you could see your entries there, and then you got the massive move this week in the dollar yen. So something like that is definitely a way that you can trade the Forex. It is a swing trading approach, though. Now, not to cherry pick. Let's go ahead and pull another chart. Let's pull Euro USD. Okay, 4 hours. Let's get rid of all this stuff. 4-hour chart. We're going right to the open, right? Which is going to be the 28th. Right there. That would have been your 2-bar orb. That would have been your open in 4 hours. That would have been your second bar. So the orb would have been right there. Very, very tight. Very, very tight orb. You remember on our, on the test we were just running. Where the heck is this thing? All right, here we go. The test that we just ran on our algo builder, it also introduced a filter. If the range was too small, if the range was too big. Interesting. That was your 2-bar orb. 1, 2. Where was your bid? Your bid was right there. Right? How did it work? Stop loss, let's say right beneath your orb, somewhere right in there. Could we at least get a 1-to-1 out of this? Theoretically, you got a 2-to-1 with that spike right there, right? This move right here. But if we were to 1-to-1, pretty good trade, Euro USD, right? Profit target was up there at 114.13. Stop loss was down there about, 113.79, something like that. Entry was right around 113.96. Pretty good trade. Not terrible. Was it tight? Very tight. Was it viable? Absolutely. Absolutely. So I love the 4-hour chart there, Ralph, right after the electronic open on a Sunday. 2 bars. Could be pretty good. Now, the other way to do this is this. This is a bit trickier if you want to go down to, say, a 30-minute time frame. This would be one that I could probably sign off on. I would have to do some more research to really swear by it, but right there, so there's going to be your London Open. Really, your European Open would have been, 1 a.m. my time, so 3 a.m. Eastern. Something like this. Bar 1, bar 2, 30-minute chart. What does that look like? There was your sell, and there was your move. You got this move really during that London-U.S. overlap. Pretty good time to be maybe trading those Eurozones. I don't know that I advise going any lower than a 15-minute chart, though. The problem you were going to run into with your the problem you're going to run into essentially with your Forex pairs is when you get into those really small time frames, those tight time frames, you're going to run into endless chop. The market gets choppy in a hurry. And that's what we want to avoid. We want a solid opening range. To me, that's a 30-minute chart. If you're going to start at the really at the beginning of the currency pair session that you're trading. So let's run another one. Great Britain Pound USD. Let's say we wanted to trade this one. We would be looking right at the London Open, right? Which would be about 1 a.m. my time, about 3 a.m. Eastern. You got to check your local listings wherever you are in the world. But something like this, that would have been your range. Did you make any money there? Was it a winner? There's your entry. There's your stop loss. Did you get any money at all out of it? No. Why? Because you got nailed right there. You got nailed right there at the U.S. Open, essentially. So 6 of one, half a dozen of the other. I mean, pick a time frame, go through and do some research, build some of these algos, do some back testing, get in there and start working with it and see if you can find something that historically has been pretty good. I would not feel comfortable going beneath a 30-minute on a Forex pair, and that's just because the markets just don't move. If you go beneath that, you're going to get a lot of really tight ranges. Does it even help you here? I mean, does it help? Bar 1, bar 2. Same basic range. Boom, boom. So it's the same essentially the same loser. But that's how you would approach it with the Forex. If you're going to trade smaller time frames and you want to trade on a daily basis, then you're going to look for that currency pair's open. So if you were trading yen, you're going to look right there at that Tokyo Open, first 2 bars after that. Trading the pound, probably that London session. The euro, probably that London session as well. If you're trading the USD, it just depends on what you want to do. You could wait potentially for the US Open if you're trading those major pairs and look for big volatility and moves like this. You can certainly do that. There's nothing wrong with it. Just get in there and kick the tires and take a look at what exactly you want to get done. If you're trading a cross pair, so like Euro, Great Britain, pound. 15-minute chart, I'm not doing it. 30 minutes. Let's go 30 minutes. Where exactly is this open? Right there. Did this trade work? Bar 1, bar 2. Open, open. Pretty darn good move, huh? Euro, Great Britain, pound. You'd be trading that London Open. So that's how I would approach it with the Forex. I think that's a pretty good way to get you started. But remember, none of these rules are super concrete. Get in there, do some back testing, build it out your way. Get in there with some moving averages. Use some crossovers. See exactly if you can build that ORB strategy potentially into a monster by using a confirmation device. There are no rules when it comes to strategy building. You just got to find something that works. The only rule, guys, the only rule that matters is just make money. Just make money. If you make money with this stuff, it's worth it. If you don't, you got to do something else. But that's sort of our workshop for today on the 2-bar ORB. I got into the tall grass and really showing you guys what AI is going to bring. I got a question from a trader yesterday, and he was right. His concerns were valid. He said, Shane, is AI going to replace us? Maybe. Personally, I don't think we're there yet. There's no reason why you can't dive in there and start using these tools and build something really strong for yourself. And that's what I encourage. I've always encouraged that, sort of the teach a man to fish. It's better than giving a guy a fish. Once that fish is gone, they want another fish. I'd rather teach you how to fish and show you how to get in there and start working out your own edges, start fighting for your own dollars. I mean, I can sit here and give you levels all day, and I do a lot of that. But stuff like this is far more powerful, where you learn how to build an idea in the market that could potentially be, your go-to. And don't think it can't be done. And one last thing I'm going to say about strategies and systems and all that jazz. I'm not a big systems trader. I don't. And a lot of that comes from me being stubborn. It comes from me being in the markets for a long time. And I fall back on my gut, and I fall back on my intuition and my experience. That's what I fall back on. I look to use that as being sort of my X factor, my edge. Now, is that right? Maybe, maybe not. Discretionary trading is definitely a thing of the past. I mean, we are going automated. EA trading is dominating the Forex and the OTC markets right now. AI and algos are the future, and the future's here. It's been here for a few years now. So if you're a discretionary trader, always remember that if you use your head and stick to your guns and place your trades and manage your risk, you're going to be okay. I don't care how many AI bots are trading out there. But some of these tools can help you augment your trading and maybe take it in a direction you never dreamed possible. So in my view, AI and all of this stuff, we could talk about the philosophical impacts of AI some other time. I don't feel real great about it. I could see a situation where AI really does take the world over, sort of like the Terminator movies. It's not, believe me, that's not out of the question. A lot of futurists believe that could happen, may happen. But we know that AI is not going anywhere. And the ability for us just to run some figures, some numbers like we just did on this live stream, profitability numbers, do some back testing, different time frames, you got to understand that that wasn't even a thing when I started 15 years ago. You had to get in there, pen and paper, try to figure things out. And in one respect, it made you sort of understand how the market worked. But in the other respect, it took so much time and energy that you very rarely found anything that will work. So the ability to sit there and run iterations on a strategy via automated AI intelligence is just a gift, and lean into it. Remember, systems trading, any system you have can be good. Black box systems and algorithms typically have a shelf life. EAs, can be successful for a period of time. They typically have a shelf life, though. The market sort of gets wise to what they're doing. But you don't have to be effective very long. Think of, how do you want to trade? What do you want your trading career to be? Do you want to sit here for 30 years of your life, or 25 years, or 15 years of your life? Do you really want to sit here and say, okay, I'm going to figure out every single day how to make money every single day the rest of my life? That's a lot. I always say this: if a person can get their act together and trade well, you probably won't, and you start trading size and leveling up and compounding your returns, you probably don't have to do this much longer than a few years. Once everything's in line, the money's there, the edge is there, the markets are there, you could probably make more money in an 18-month span of you trading well and having a strategy that really is banging than you can sitting there for 30 years trying to pick pennies out of the waiting pool, or out of the wishing well. That's just the way I look at it. I think that if you got hot for a year, 2 years, 3 years, that could be your career. That's the way I look at it. I don't necessarily believe that you have to say, okay, I'm going to sit here the rest of my life and do this. You don't have to think that way. You could think, you know what, if we get this going in the right direction and get a few things break our way, we get some good volatility, some good markets, good strategy, you're dialed in emotionally, mentally, physically, there's no reason why you couldn't just crush it for a few years and reach your financial goals. That's the beauty of trading. That's the beauty of trading is your best trade's always tomorrow and your best week's always next week. I'm a firm believer of that. All right, everybody, I'm going to go ahead and sign off here. I've gone long enough, but I'm glad you guys popped in for the workshop today. We covered a lot of ground, from just the basic 2-bar orb to some algo stuff to some AI stuff, and then a little bit of philosophy at the end. Nothing wrong with that. Tomorrow, I'm going to be back live for NFP Live. It's going to be more of a conventional stream. We're not going to be talking algos and EAs or any of that jazz. We're going to break down the fundamentals. We're going to break down exactly what this jobs number means, what it could potentially mean for our economy moving forward, how this could impact future interest rate expectations from the United States Fed and Kevin Warsh. And we could definitely do a little bit of live trading, which I'm anxious. I'm anxious to do some live trading. If I was going to pick an ORB day, a day to play the opening range breakout for U.S. equities, it probably would not be an NFP day. And the reason why is we're going to see some real chaotic, choppy price action before the market opens, which could mess our ranges up something fierce, that's for sure. All right, everybody, I'm going to go ahead and sign off. Marvel, let's just take good advantage of the AI system. Let's use them as our tools for easy work. Couldn't have said it better myself. Sean Evans, thanks, Shane. You're absolutely welcome, Sean. Remember, you can always find me over at howtotrade.com. Free subscription. Subscribe. Go into the trading room. Click on my picture. Send me a message. Say hi. I always answer. I answer everybody, so be sure that you tune in for that, and be sure to drop me a line. All right, everybody, we'll see you tomorrow bright and early on NFP. As always, trade the action well, and we'll talk soon. See you. A quick one before our live stream starts. If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking